Hey all, welcome to ShareTreck. Good morning. It's the 17th of June 2022, and let's get started with our daily update. So I'd like to start off by saying that most of us have been quite puzzled with why the market fell before the 75 basis point hike and also after the 75 basis point hike. So my search has been revealing that there are two schools of thought. One school of thought is that the professional investors or the institutional investors were already sure of the 75 basis point hikes and started selling a couple of days before the hike. And then the retail investors started selling after the hike. So that's one school of thought. The other school of thought is that the Swiss franc got stronger because after a very long time, the Swiss increased their interest rate. And it seems that a load has been taken off the US dollar, and some funds had moved out of the US dollar index and gone into the Swiss franc, which seems to be a more plausible theory. And that could explain why, even though we had the US dollar index going down, we still didn't have NASDAQ going up because the money just changed for diversification of risk, geographical diversification. So that makes more sense to me. So we have to watch out what happens, because in the past also there was a time when Japan had the zero interest rates going on and people had borrowed from Japan to invest in other places. And when the Japanese started raising the interest rates, I think there was a pullback that affected globally. So we have to, the lesson I learned is that probably we have to scan much more seriously about what is happening with other central banks. Not all central banks, but the really big ones which have an impact, like European Central Bank and probably the Swiss. So with that said, here is the first headline. It comes from Market Insider. The stock market faces heightened risk of another sell-off if the VIX fear gauge crosses 38. Leads Katie Stockton says. So this headline, I agree with this, because as we saw in our VIX, we have an all-time high for VIX where we have a resistance line, a red line. I'll show you when we do the VIX analysis. I totally agree with this headline. That could be a huge sell-off, and that could probably lead to the capitulation of the market. The other news that I want to talk to you about is that Russia's Gazprom continues cutting natural gas supplies to Europe, just as customers try to build up inventories for winter. Europe is likely to face the biggest demand for gas around winter, and the winter is approaching with every passing day. But again, Europe is also trying to get liquefied natural gas from elsewhere and try to fill up its reserves. So things will get resolved over a period of time. Europe has got sufficient funds, and it has the purchasing capacity. It will be able to source oil and gas from other places. So that said, and let's look at the next headline. Swiss National Bank raises rate in shock move, ready for more. So we'll have to watch out for the next time the Swiss bank increases interest rates, because there is another chance that more money will go out of the dollar index and get into the Swiss bank. So when we are doing our daily analysis, if we saw the dollar index going down, and if around the same time Swiss bank increases its interest rates, we have to assume that there's a chance that NASDAQ may not benefit fully from the drop in US dollar index. So that's the lesson out there. Iran sanctions could tighten if nuclear talks fade, Biden admin officials tell senators. So this is one headline, and the other headline is US pressures Iran by targeting Chinese UAE companies. So basically what is happening out here is that the Biden administration is trying to attack inflation in a multi-pronged fashion, and I think that's the right thing to do at this point of time. On one end, they are trying to make sure that Iran, which is reported to be digging more tunnels, and there's an indication that they have a rocket launch or something coming up, US is tightening them up by making sure that there are no other companies which can help Iran. And they have targeted specific Chinese and UAE companies that have been helping Iran sell oil outside. So once they crank up this pressure, that puts economic pressure on Iran and makes it more willing to negotiate with the US. Because right now they can see that with the removal of Russian oil and gas from the market, Europe is more beholden to Iran to release some oil from its reserves. And therefore, Iran could play tough. And this is a kind of neutralizing move by closing off all the things that were given a blind eye before and targeting Chinese and UAE companies that are helping Iran. And on the other hand, they are saying Iran sanctions could tighten if nuclear talks fade. They don't want Iran to go away from the table. So these are really good pressures. And also the talk of a negotiated settlement has progressed further. So we had another CNN report from a very senior US official in Ukraine, and they have been talking about getting a negotiated settlement in place as soon as possible. So all these things are likely to reduce the pressure on oil and gas, and that in turn will reduce the oil prices and wheat prices in relief. And as a result, there can be an immediate drop in inflation, and that can get us into a much better place than where we are at. And it's just a matter of time before China decides that it's going to remove the lockdowns and it's ready to start business as usual. When that happens, I think we'll be out of the woods. The question basically is, how long is that going to take? 36% of US employees with salaries of 100,000 or more are living paycheck to paycheck, twice as many who said they were in 2019. So in the last 3 years, there is double the number of US employees with salaries of 100,000 or more saying that they are living paycheck to paycheck. So that's a big deterioration of living condition. Willis Towers Watson, it's basically a pension and funds company. They polled 9,658 full-time employees from large and mid-sized private employers in December and January 2022. So it's very recent info before the most recent inflation readings. So if they did a similar poll right now, I bet that we are going to see more than 34% of workers saying that they are living paycheck to paycheck. So this also indicates that there's going to be a bearish overhang on the market, because many of these people who are investing in the stock market are going to have a tough time retaining their investments in their portfolio. They may feel the pressure to have to withdraw in order to avoid further losses and also to meet day-to-day expenses. So that's another source of consistent bear market that I can see from this news article. With that said, let us go and have a look at NASDAQ and other indices. Suffice to say that at this point of time, even before looking at the indexes, I'm feeling that we are in due for a relief rally, which will be short-lived because other underlying issues are not solved unless the US comes up with a negotiated settlement for Ukraine and Russia within this week. I don't see anything spectacular happening right now. And we also have the quadruple witching effect. So markets are likely to be volatile. That said, we are going to look at the futures first. NASDAQ shows a positive gain in the futures. So NASDAQ futures are showing a gain of 1.12%. So we are still well above the diagonal line of support. We are doing well. And I think now we have to go and have a look at the indicators. I'll first go to look at oil. Oil is down marginally, but it's still at the higher range of yesterday. And our MACD is still bearish and momentum is flat. So we have to expect oil to go down further. This is today's candle for the 17th. It's a bearish hammer, inverted hammer, and chances of it coming down is more than chances of it going up, in my opinion. We'll see what happens when the market opens. Now let us look at our put-call ratio. Put-call ratio ended up at 1.267 yesterday. This is yesterday's candle, and that means that we are totally in the bearish side of the market. So what happens today will again depend on the market action. We'll get the candle only after the market opens. With that said, I would like to look at the VIX and look at where VIX is. VIX has come down from the level that it ended up yesterday, so that's a very good sign for us. And if VIX goes down, we know that it's going to help NASDAQ and other asset classes, so that's a good thing. Let us look at the US dollar index. US dollar index has gone up. This is not a good sign for our shares. And let me see, this is the candle for today. This doesn't bode well for shares, so this is a bearish indicator for the shares. Also, the MACD is still strong and momentum is upward, so that seems to be a good momentum of money going into US dollars. That said, if I look at the yields, US 10-year yields are going up marginally, but they have come down a good bit. When the yields go up, it means that people are getting out of the US bonds. Probably that money is going into other areas. Let us see where the money has gone in. Let us look at QQQ first. And if we look at QQQ, we have a pre-market condition of 1.22% gain. So that's a handsome gain pre-market. We also have this diagonal line of support that we breached yesterday, and pre-market we seem to have come back up again above it. So this would end up being a support. I'm going to mark it green for the time being because we're already up pre-market. Our next line of support is this diagonal line. MACD is still bearish and moving away from the signal line, and momentum is also weak. So overall, the pre-market gives us a bullish signal. We'll go with that. We'll say there's a relief rally afoot today. SPY is also up 0.66%, and it also shows a bullish open in the market. Right now it's 8:21 a.m., so we are not that far ahead of the market. So I'm hoping that this bullish trend will persist because I'm expecting a dead cat bounce or a relief rally today. It may not be long lasted, but it will still be something. So given that, I would like to now go and have a look at crypto and gold and see what they are doing. That will also give us some clue where the money is going in. Money has gone out of gold. I think it has gone back into the US dollar and maybe the bonds. And if we look at Bitcoin, Bitcoin has gained a little bit. So some money has definitely gone into Bitcoin. It is still struggling and holding on about 20,233. Honestly, I'm also waiting for Bitcoin to drop so that I can make another buy and reduce my and do some dollar cost averaging. Because if I zoom out to the long-term picture, I can see that there is probably a middle stop somewhere out here. We'll get support. That's going to be somewhere around 20,000. Sorry, this line out here, which is going to be around 16,527. And then the next support happens to be at 12,981. So I'd like to do a dollar cost averaging somewhere closer to the 16,000 and another one somewhere closer to the 12,000, because I think in the long term, Bitcoin value is going to be intact. But this is what they call it as a crypto winter. That's my opinion, and that's what I'm planning to do. And the biggest loss I've had is in Algorand. I had holdings at around 75 cents, and I had a lot of staking income that came in. All of those things are severely devalued, and I'm really regretting my investment in Algo. But their use cases are good, so I'm going to hold on. I'm not selling any of them, and I'm not swapping it for something else. I'm going to hold on for a while and wait it out. So if we see the past crypto winters, they have lasted, let's say, from 2019 all the way to 2020 December, so almost a year. So I'm prepared to just bat down the hatches and sit down for another year to wait for it to come up again, because when it does, it will come out with a very heavy return. At that point of time, I'll consider selling or whatever. So for right now, I'm going to be dollar cost accumulating on the way down, but not buying anything today or tomorrow. I'm still waiting for Bitcoin to drop down to somewhere around 16,000, which is my first stop when I'll decide to buy a little bit for dollar cost averaging down. With that said, let's go and have a look at our genomic shares. So here is our charts for genomic shares, and we can see CRISPR did the best yesterday, followed by Intelia, Beam, and Novartis. And of all of them, CRISPR is the best at 3.16% gain, and Intelia at 1.25. The other two are minor gainers, in my opinion. And the worst performer yesterday was continuing to be Bluebird. I already addressed that in the end of day video. And I also mentioned during my end of day video that we would be in a much better footing when we are inside this range bound movement. And we have yesterday tested, Bluebird tested our support, which happens to be at 2.89. And we have, sorry, it's at 2.89, and we have then bounced back. And today, pre-market, we are seeing a gain of 3.59. So anyone who had bought yesterday, in my opinion, is likely to make some profits today, or they could put a call in place and continue holding this and make their money through calls. But I think that Bluebird is going to be range bound within these two range, and this is an aberration. It's a one-off mistake out there, but Bluebird is going to be range bound. That's my opinion, and I'm going to stick with that for now. And that said, I think I'm going to move this line slightly down because we have 3 touch points here. So this is the line of resistance, in my opinion. And we'll see how long we can be in this. And as long as we are in this range, I think it would be safe for me to do some kind of trading, day trading or swing trading, or putting some calls in place, buying closer to the bottom and selling closer to the top. That is my personal opinion, not financial advice. Please do your own due diligence before you make any investments. Now let's look at CRISPR Therapeutics. It is still following this diagonal line of support, and pre-market it is up 1.17%. So it's still staying above this diagonal line of support, because the candle will likely form out here when the market opens. Intelia is down for 3.47% this morning. So that doesn't sound very good for Intelia. It's already below this line of support, and which we marked into resistance. And because it is hitting at the resistance, that's the reason why I think it's going down. Our MACD is also bearish, and momentum is also flat and below average. So it's likely to bounce between this support level and this resistance level. So I think it's going to consolidate between these two ranges until some catalyst happens. And next, let us look at Beam Therapeutics. Beam Therapeutics is still respecting the support out here, the horizontal support, which sits at 29.41. We'll see that the MACD is crossed over the signal line in a bearish manner, and momentum is also below average and flat. So I don't know how much of the gains it can retain, but there is definitely going to be a dead cat bounce effect in the market, given that Beam was already positive yesterday, and given the way the MACD and the momentum is, I think that Beam might probably find it difficult to retain its gains. But in general, I think all the shares that were in the red yesterday are likely to get some amount of gains to recover some of the losses that they made yesterday, and that would be the trend. Let's look at PACB. PACB is range bound, and it's moving within these two ranges. I'm going to mark this as a resistance. I've just plotted these two lines. In the last 5 days, we have seen that PACB has respected this particular line on the top, because it provided a resistance support the day before, and the resistance the day after, and again resistance one more time. And therefore I'm thinking that this is going to be a line of resistance for the short term, and I have drawn a line of support for the short term. We got support here first time, we got support here the second time, we got support here the third time yesterday, and today also pre-market we can see we are up 1.48%. so this support still seems to be functioning. Therefore, I'm thinking we are going to move between these two ranges of 4.02 and 4.56. So there's a 50 cents chance, 50 cents window in which one could do some kind of trading and make some profits out there. Of course, it's not without risk. The markets are highly volatile. We also have the quadruple witching coming around. So violent movements are possible in the market. Again, this is not financial advice. I'm just thinking out loud all the things that I might like to do if I was sitting on the terminal. So that said, I'm going to look at Illumina. Illumina is again fallen yesterday, but if we look at pre-market trade, it's gone up plus 0.94%, and it still has the 9-day exponential moving average as a resistance. And I also think that for this share, there is going to be a zone out here. I'm going to draw two lines instead of a rectangle. There's a zone out here where we seem to have a good amount of sellers. So breaking through this zone is going to be important for Illumina in order to start challenging the 9-day, 20-day and other exponential moving averages. Right now, it doesn't look in a good shape. But given the fact that the momentum is almost so down, and MACD is also very bearish, probably we have come to a situation where we are likely to bounce back up again. But then again, if you look at the MACD before, it had gone all the way to minus 30.69, and we still have a long way to go down. So if it wanted to go down, it could go down further. And in terms of momentum, we have been at 17.73 in the past. So there's more Illumina could lose. But I think both Illumina and PACB have got unique business proposition in the genomics world, because all the companies are likely to use their products and consumables. So the benefit that the leader in this sector is going to get is definitely going to give a share of revenue to Illumina and PACB. And all the companies in this sector, when they are doing their research, most of them are likely to spend some amount of their budget on equipment and consumables from Illumina and PACB. That's the reason why I'm looking at these two. So with that said, I would probably go back to VIX because we spoke something about VIX before and I did not complete the thought. Just bear with me for a minute. In an earlier news article, I was saying that I agree with the headline in CNBC that says that if VIX was to break over 34.75, then we'll have a huge drop, which could even lead to capitulation. This is the line that they were talking about. We have it at 34.75. I think they have it around 35 or something. I don't remember the headline right now, but this is the all-time high for VIX. If you notice, on 13th of June, we touched it and came back. We did that on 9th of May. We did that very spectacularly on 6th of May. We did that on 2nd of May and 12th of May. And again, we did that on 16th of June. So the fear is that once you cross over this, then there's going to be a huge spike going all the way to 40, which means there's going to be a big drop, which is going to be something like we had seen probably somewhere around 24th of January 2022. So that's the risk out there. So market, again, is very volatile. As I mentioned earlier, we need to be careful in our dealings, and we need to be extremely patient with this market. We can't allow our emotions and fear of missing out and all those things to come into play. I would advise most retail traders to just stay on the sidelines and watch the market until all this bad time disappears. If you don't bear the sight of red in your portfolio, just don't log in. Just don't look at it. Maybe even stop watching videos on investment for a while. Go for Netflix and just binge watch on some series or something, because until Friday, things are going to be fraught. With that said, I think I'd like to end this video. Please press a like if you like this video. And also, if you're not yet subscribed, please subscribe. It's a free subscription. Thanks and have a great day. Bye for now.